This is Scott Bauer with Prosper Trading Academy and your SIBO Vol 411. After a second positive day in a row, the S&P, which has traded in a very narrow range over the last week or so, it's heading into tomorrow's all-important PCE report, Russel Reconstitution, and end of the quarter. The focus really is on the PCE report, especially after the most recent CPI results came in lighter than expected. Overall option volume yesterday and over the last week or so has tapered off. It's been lighter than we have seen recently. Yesterday was no different. 42 million contracts traded, about 8% below recent averages. Calls led puts by a 14-9 margin. At the money implied vol for SPX options expiring tomorrow, that's near 12%, and that drops significantly for next Monday, and we need to watch because the 52-week low for SPX implied vol is about 9.67. SPX traded 2.5 million contracts yesterday, 20% lighter than normal, and a few strikes to watch with large open interest expiring Friday are the 5350 and 5300 puts and the 5570 calls. VIX yesterday traded under 600,000 contracts, but even with lighter volume, the call volume was elevated with a call put ratio near 5-1. December 39 calls traded opening 60,000 times, the 45 calls in December 35,000. The VIX futures curve still points to a sharp acceleration ahead of the presidential election. Spot right now is 12.5, July's 14. That ramps up to about 18 for October. On the equity side yesterday, NVDA the leader again. Almost 5 million contracts, calls led puts by a 1.5-1 margin. Also, Amazon, we saw that stock hit new all-time highs, catapulted yesterday about 5% or so, traded over 1.5 million contracts. That's 3 times normal average daily volume. Calls led puts by over a 3-1 margin. This is Scott Bauer with Prosper Trading Academy and your SIBO Vol 411.